Economic Recession of 2008. In the annals of modern history, few events have left a deep imprint on the global economy. One such event is the economic recession of 2008. It was a time of financial turmoil, economic uncertainty, and widespread anxiety. Banks were on the brink of collapse, housing markets crumbled, and millions of lives were upended. Today, we'll explore its causes, the dramatic events that unfolded, and the lasting impacts it left on economies, industries, and individuals worldwide. We'll also examine the remarkable policy responses and the regulatory reforms that aim to prevent history from repeating itself. The events leading to the crisis of 2008. Our journey begins by examining the economic landscape leading up to the 2008 recession. It was a time of optimism, but beneath the surface, vulnerabilities were mounting. During the early 2000s, there was a rapid increase in housing prices fueled by speculation and lax lending standards. Many financial institutions issued subprime mortgages to home buyers who could not afford them. As housing prices began to decline in 2006 to 2007, many homeowners could not make mortgage payments, leading to a surge in mortgage defaults and foreclosures. The housing market's collapse eroded the value of mortgage-backed securities held by financial institutions. Financial institutions, including investment banks, had invested heavily in mortgage-backed securities. These institutions failed to assess the risks associated with these investments accurately. The widespread losses in the financial sector caused a crisis of confidence in the interbank lending market. Banks became wary of lending to one another, leading to a credit freeze. This freeze impaired the functioning of the financial system, as banks relied on short-term borrowing to fund their operations. The collapse of Lehman Brothers in September 2008 sent shockwaves through the global financial system. Credit markets froze and panic spread among banks and investors. It was a period of uncertainty and fear as the world watched some of the most prominent financial institutions were on the brink of collapse. Beyond the numbers and statistics, the recession of 2008 had a profound impact on people's lives. Job losses, foreclosures, and financial hardships became all too common, leaving lasting scars on communities. Policy responses and controversies. Following the eruption of the 2008 economic recession, governments and central banks were thrust into action to mitigate the crisis impacts and stabilize the global economy. Their strategies included massive bailouts, stimulus packages, and various interventions. Governments around the world initiated large-scale financial bailouts to rescue troubled banks and financial institutions. These bailouts involved injecting substantial sums of taxpayer money into institutions that were on the brink of collapse. Governments also implemented stimulus packages aimed at boosting economic activity. These packages included infrastructure spending, tax cuts, and direct cash payments to citizens. Proponents argue that these measures were necessary to jumpstart economies facing recession. Critics, however, raised concerns about the long-term fiscal implications and effectiveness of these programs. Dodd-Frank Act. In the United States, the Dodd-Frank Wall Street Reform and Consumer Protection Act were enacted. This comprehensive piece of legislation aimed to address various shortcomings in financial regulation. It established new regulatory agencies, increased transparency in financial markets, and implemented measures to curb risky banking practices. However, it also faced criticism for being overly complex and burdensome for financial institutions. Recovery from the economic recession of 2008. Recovering from the 2008 recession was a challenging and protracted journey that required individuals, businesses, and entire industries to adapt to a significantly altered economic environment. Financial institutions tightened lending standards in response to the crisis. This meant that obtaining loans for homes, cars, or business investments became more challenging. Reduced credit availability affected both individuals and businesses, making it harder for them to finance large purchases or expansion plans. The experience of the 2008 recession left lasting lessons about the importance of financial stability and risk mitigation. It highlighted the need for individuals and businesses to be prepared for economic uncertainties and to maintain sound financial practices. Today, we journeyed through the complexities of the economic crisis of 2008, witnessed the resilience of individuals and businesses, and explored the winds of change that shaped the financial world. The lessons we have uncovered are not confined to the past. They're guiding lights for tomorrow's financial leaders, entrepreneurs, and innovators. So embrace the knowledge, draw inspiration from the stories of adaptation, and use the wisdom gained from the 2008 recession to forge a brighter economic future. If you found this video enlightening and wish to stay informed about critical economic events and lessons, please like, subscribe, and hit the bell icon.